On July 27, 2025, the US and EU struck a last-minute trade deal at a golf resort in Scotland. President Donald Trump and European Commission President Ursula von der Leyen met to prevent a looming trade war. Trump had threatened steep tariffs on European goods, up to 30%, if no agreement was reached by August 1st. The world watched as both sides faced intense pressure to compromise. The meeting's location, Trump's own golf resort, highlighted his personal approach to diplomacy. The deal was announced late Sunday, surprising many. Von der Leyen represented all 27 EU countries, tasked with finding a solution acceptable to both Europe and Trump. The agreement has sparked heated debate across Europe. Some leaders, especially in France, are furious, while others are relieved. Germany's response is mixed, with government and business leaders divided. The deal will reshape US-EU trade for years to come. In this video, we'll break down what's in the agreement, who wins and loses, and why it's so controversial. We'll explore the details, the reactions, and what this means for the future of transatlantic relations. Why are some European leaders calling this a dark day? How will it affect industries and consumers on both sides? And what comes next for the US and Europe? The story of this deal is just beginning. Let's dive in. The new deal introduces a 15% US tariff on about 70% of EU exports, worth €380 billion a year. This is a sharp jump from the previous average of 4.8%. It's less than the threatened 30%, but still a major blow to European exporters. In exchange, the EU will lower its tariff on American cars from 10% to 2.5%, with a possible future drop to zero. The EU also commits to buying $750 billion in U.S. energy over 3 years and investing $600 billion more in the U.S., including military equipment. These concessions were made to avoid even harsher tariffs. Some products are exempt: airplanes, certain chemicals, semiconductor equipment, and some farm goods. But European steel and aluminum still face a punishing 50% U.S. tariff. For the first time in years, European medicines will be hit with a 15% tariff, raising costs for American patients. The deal is a mix of relief and pain. It averts disaster, but at a high price for Europe. American companies gain easier access to the EU market, especially in cars and energy. European companies face new costs and uncertainty. The agreement is complex, with winners and losers on both sides. The EU's main goal was to avoid a trade war, but the cost is steep. Many in Europe are asking, was it worth it? The details are controversial and will shape transatlantic trade for years. Let's look at how Europe is reacting. France's response was furious. Prime Minister François Bayrou called the deal a dark day and accused the EU of submitting to US demands. French officials say the agreement is unbalanced and only offers temporary stability. Trade Minister Laurent Saint-Martin argued the EU should have threatened its own tariffs instead of conceding. France sees the deal as a sign of European weakness and fears it sets a bad precedent for future negotiations. The anger in Paris exposes deep divisions within the EU. French leaders worry about the impact on industries like cars and luxury goods. For them, it's not just about money, it's about Europe's place in the world. This strong opposition could make it hard to get all 27 EU countries to approve the deal. France's reaction is a major obstacle to European unity. The debate is far from over. Will France block the agreement? The next steps are uncertain. Germany's reaction is split. Chancellor Friedrich Merz welcomed the deal, saying it prevented a damaging trade war. For the government, stability and U.S. relations matter most. But German business groups are alarmed. The BDI and VCI warn the 15% tariff will hurt exports and cost billions. The car industry, especially brands like Volkswagen and BMW, faces huge losses in the U.S. market. The VDA says the new tariff is a heavy burden, especially as companies invest in electric vehicles. Political leaders are relieved, but industry leaders are deeply worried. This division highlights the tough choices Germany faces: political peace or economic pain. The debate will intensify as Germany decides whether to support the final deal. The stakes are high for Europe's largest economy. Can Germany bridge the gap between politics and business? The answer will shape the EU's response. The coming weeks will be critical. Across Europe, reactions are mixed and reflect national interests. Ireland's Deputy Prime Minister welcomed the certainty, but regretted the new tariff. Italy's prime minister called the tariff sustainable, but wants more details. Italian winemakers fear big losses. Hungary's Viktor Orban mocked the EU's negotiating strength, saying Trump ate von der Leyen for breakfast. Belgium's prime minister summed it up: a moment of relief, not celebration. Many countries are relieved the 30% tariff was avoided, but few see this as a win. The deal introduces new costs and uncertainty for European businesses. Some leaders are openly critical, others cautiously optimistic. The lack of unity makes ratification difficult. Each country is weighing its own interests. The EU faces a tough road ahead to get all 27 members on board. The divisions are deep. The next phase will test European solidarity. The auto industry is hit hardest. U.S. tariffs on European cars jump from 2.5% to 15%, while the EU lowers its tariff on U.S. cars. German brands like BMW and Mercedes face billions in losses and possible job cuts. The timing is bad, as they're already investing heavily in electric vehicles. Pharmaceuticals are also affected. For the first time, European medicines face a 15% U.S. tariff. This could make life-saving drugs more expensive for Americans. Some sectors are spared: aircraft, certain chemicals, and semiconductor equipment are exempt. But wine, spirits, and other goods remain at risk. The deal disrupts established trade flows and creates new winners and losers. Industries across Europe are bracing for impact. The uncertainty is widespread. The consequences will be felt for years. How will companies adapt? The answers aren't clear. Economists and financial analysts see the deal as a win for the U.S. and a loss for Europe. Berenberg Bank's chief economist says the U.S. secured higher tariffs and more EU concessions. UniCredit calls the deal one-sided, with Europe giving up a lot for little in return. The EU agreed to higher U.S. tariffs, lower its own, and make huge U.S. purchases. Markets initially rallied on relief, but the mood soured as details emerged. German car stocks fell sharply, reflecting fears of lost profits. Investors prefer a bad deal to no deal, but the long-term damage worries them. The deal avoided chaos, but at a high cost. Financial experts warn of lasting harm to Europe's economy. The relief is temporary. The real test is still to come. The deal is just a framework. Many details remain unsettled. Lawyers and trade experts must now finalize the legal text, a process that could take months. Every EU country must approve the deal, and opposition is strong in places like France. The ratification process could spark more political battles and delays. The US wants quick implementation. The EU's process is slower and more complex. The timeline is tight, with pressure to finalize before new tariffs take effect. The deal could reshape US-EU relations, trading economic concessions for security promises. Europe may have sacrificed economic interests for defense guarantees. This experience could push the EU to become more united and assertive in future negotiations. The coming months will test Europe's ability to act together. Will the deal survive political infighting? The outcome will define the next chapter in transatlantic trade. The world is watching. The US-EU trade deal is controversial and costly. It avoids a trade war but imposes a permanent 15% tariff on most European goods. European industries, especially cars, face higher costs and tough choices. The EU made major concessions, sparking anger and division across Europe. Trump's America First strategy forced Europe into a defensive position. The deal's fate is uncertain, with ratification far from guaranteed. Europe must now decide how to respond: be more assertive or risk further losses. The experience may push the EU toward greater unity and a stronger defense of its interests. The next months are critical for Europe's economic future. The US-EU relationship is at a crossroads. The story of this deal and its consequences is just beginning.